Hello and welcome to another update video about FETCH.AI. FETCH.AI, we start here on the 4-hour time frame and we can see that the overall wave pattern is still intact. So what we discussed over the last few days after we had to increase the wave degree of this wave 4, which had an impact on the support areas because so far there hadn't been any confirmation for a low in place. Now at least we have a green candle, which however isn't very convincing yet. Still though, it seems like some sort of a low is in place here. But before we dive into the microstructures, what does this overall bigger picture tell us? So the idea is that a larger degree third wave that started here actually. Larger degree third wave that started in October 23 at around 16 cents, yeah, this finished in an A, B, C structure. Problem is, so by the way, it finished in March this year at around 350. The problem is that this third wave is a little bit short. It's a little bit short. I don't fully trust it. That's the problem. I wanted to see one more high. We know that most third waves reach at least the 1.38 FIP extension. Now it did reach perfectly my minimum requirement, really just the bare minimum, which is the 1.236 extension. But we wanted to see a move up to nearly $5, at least actually. Okay, not at least, but for the first ideal target to be reached. Not the bare minimum. Okay, so it's valid. It reached the 1.236 extension. I mean, we can go with that, but that's not an ideal target. That's just really the bare minimum for a third wave. So that was reached, but that's a bit of a problem. It makes the entire chart a bit questionable, but it means because we broke below micro support, we are now in the larger fourth wave already. So I cannot assume anymore that we are still in this third. Again, that makes it a bit problematic. I call that move up an ending diagonal in wave C. Yeah, so the C wave is an ending diagonal. We have a corrective move in wave 1, even though it visually looks impulsive, but yeah, it would take too long now to go through the detail, but you can count it as an ABC. This here you can count as an ABC. That's our third wave, and the fifth wave, yeah, obviously as well. Hasn't started yet, but the expectation would be that it's also going to be a 3-wave move. So now let's take a look at the smaller time frame. You can see that the correction, which started here in March, it is a 3-wave move down. And the price recently broke above our first trend line here, which was an initial breakout signal. However, that move up, there's not enough structure for me to work with. It's entirely possible that this decline completed wave 4. But I really need more evidence for that. Okay, so we're far away from confirming that. It just takes much more. Because this is so far only a 3-wave move up that we've seen. We've really only moved into the first micro resistance area between 155 and 173. It's not convincing me yet. Yep, we broke above the initial trend line. Let's see if we can get also above the next trend line. To keep going further and higher, we need to see the price react to micro support, which is now between $1.21 and $1.46. From here, a C wave rally can start. That would be wave C of B. Okay, or something more bullish. But in the yellow count, I'm very much focused here on risk management. It's easily possible that this move down was only the A wave. We're moving up in the B wave and then come down in wave C. Very much possible. That could increase the duration of this correction significantly. So I just want to make sure that yes, we can go higher against the $1.21 level. So the deeper we go into support, the better from a reward to risk ratio point of view. Then if we then break above that upper resistance area, or let's say the next resistance area here, micro resistance, and the descending trend line, we can watch the next resistance area, which is defined between $1.97 and $2.74. So only if we break above $2.74 and we get the right structure, yeah, then we can also take a look at the next major upside targets. It's just that at the moment, the main support area is defined between $1.07 and 52 cents. So even if we break below 121, which is micro support, we might just test the lower one. There is no confirmation yet that the low is in place. It's possible something is changing, but it could simply be an extended fourth wave in this ABC structure. So it is a difficult structure to deal with. Yeah, I would be very much prepared for a long correction. Doesn't have to happen, but I would be prepared for it, because even if we get that large B wave, I mean, that can take a while to complete. I mean, maybe even into, I don't know, end of June, early July. I mean, this is sort of already end of June nearly. Early July, mid-July maybe even. And then we can still come down lower in a C wave. Let's see if we can hold micro support. We really have to take it level by level, because we could still be moving within a corrective structure. Important resistance, really important resistance, is up there in the $2.70 area, previous B wave high and yellow B wave resistance. So at the moment, higher prices possible against $1.21 short term. Okay, so that's what I'm watching primarily, but it's too early to say if the entire wave 4 bottomed. We build the case as we go. That's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, and please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye bye.